Are you an accounting firm owner who is looking to add high value advisory services to your existing service offerings, but you are not quite sure what additional services you could provide to your existing clients and also how to actually do it? Then you must listen to this episode. If you look into your clients list, you'll find that many of your clients who would eventually want to sell their business do not have a business exit strategy. And so, as a trusted advisor to your clients, you could provide an exit planning advisory service in addition to other accounting and uh, tax prep services you already provide. You can leverage your already established relationship with your client and grow your own practice while also helping your client exit their business with a better financial return than they would normally get. But how can you do that? What is required? What does exit planning actually mean? And what can you charge your clients for these services? These are the questions we'll tackle today. I've invited Chris Tabb, a certified exit planning advisor, in today's episode of the Offshore Accountant podcast. He will help us understand the intricacies of exit planning advisory and how you can also offer these services to your clients. So, without further ado, let's welcome Chris to our podcast. Chris, I'm so happy that you could join me today in this podcast. Welcome. How are you?
I'm doing wonderful. I'm so excited to be here. Thanks, Sushil. And this is such a fantastic topic that we're gonna talk about today. So, Sushil, hit me with the questions. Let's get into it.
All right, awesome. So why don't we kick this conversation off with your introduction? Who is Chris Tabb?
Oh, that's a fantastic question. So I am a part entrepreneur, right? I've had a couple of exits. I've been a business owner at times.
Right.
I acquired a business. I sold a business. I've worked in product development and marketing technology for 10 plus years now. And, probably in the last 3 years, I've really started to focus on this concept of not only acquiring a business, but what are the deal mechanics, right?
Mhm.
That make a deal work? What's the difference between a deal that is going to fail and a
Right.
deal that's going to be successful?
Right.
And then finally, the elements that personally, from an owner's perspective,
Mhm.
the next day after you sell your business, making sure that you are happy and content and have a plan forward.
Yeah. So we are talking about exit planning, and so Chris, why should an accounting firm look into the exit planning advisory offerings? So what is the scenario there?
Yeah, absolutely. I think if I'm putting myself in the shoes of an accountant,
All right.
I'm looking at this a couple different ways. First and foremost, it allows me to be a better advisor
Mhm.
to my end clients.
Right.
Meaning, many of us know that in owner's wealth, 90% of it is
Mhm.
tied up in their business.
Yeah.
At some point, they're gonna have a transaction point in the future,
Right.
right? Wouldn't it be better if you are the advisor who is working with them holistically?
Mhm.
And when I say holistically, I mean talking about the business,
Mhm.
talking about the personal elements, right, of the human being that's running that business. What is their plans after they sell? And then finally, looking at it through the lens of the personal financial aspect as well, right? So we call these the three legs of the stool,
Right.
and those need to be aligned for a good sale. A little bit on the opportunity though as well.
Mhm.
Folks listening to this podcast, they've probably heard folks out there like Cody Sanchez, right? Who's
Yeah.
been really beating the drum of buying boring businesses, right?
Mhm.
I mean, I know I've heard it. Have you been sort of privy to that as well online?
Yeah.
Yeah. And really why this is happening is because you have so many baby boomers
Mhm.
who are either have met the age of retirement,
Right.
or when you look just today in 2024, the number is 12,000 baby boomers are reaching the age of retirement daily.
Right.
So let's now translate that into ownership of businesses here in the US, right?
Mhm.
51% of small businesses are owned by the baby boomer class.
Right.
You've got 4.5 million
Mhm.
privately held businesses that are going to transition right over the next 10 years.
Right.
And that's $14 trillion worth of assets that are going to change hands here in the future. 69% of business owners, have identified exit planning as their primary objective.
Right.
And then finally, I'll just wrap it up with this. 75% of the business owners that you work with today, they would like to exit their business in the next 10 years. So the why is so important.
So you talked about Cody Senses, and I do follow her. And what I hear her when she's talking about buying business is from buyer's perspective, right? And what she talks about is that there are too many business owners that are throwing their baby with the bathwater. So are not actually valuing their business, and people like Cody Senses who are smart, they can get those business for pennies on the dollar, right? And so I think the baby boomers that are trying to retire, they are not given good advice, and so the buyers can actually use that against them and actually buy in great businesses for very little amount. So I think exit planning advisory role is quite required, and CPAs and accountants, the first things or the advisors for any business owners would be their accountants first, their bookkeepers, their accountants, their tax prep guys. But accountants do not actually have that in their services, and accountants only go so far as to maintaining books and helping them comply with the regulations with taxes and everything, but they are not actually advising for their retirement planning or exit planning. And so what I wanted to ask is that where can we provide such advisory services where people are actually eventually looking to exit for their business, and what are the services an exit planning advisor actually provides?
Yeah. So I want to just piggyback first, and then I'm going to get to what are the actual services, the process, what does it look like? Because it is a very sort of confusing topic, right? When people think of exit planning, it's sort of like all over, right? And I'll give you a framework here, but first I want to just address something you said there. Most accountants, right, are servicing, one aspect of an individual's, personal situation, right? Or maybe they're managing the business, or maybe they're doing both, right? But to your point, like at some point, the sphere of influence ends, right? And other advisors come in and pick that up. Why that's actually borne out in the data. So anybody that's watching this at a later date, if they'd like, I'm happy to share it with it. There's a presentation that just came out. It's the 2023 National State of Owner Readiness. The Exit Planning Institute puts this out every year. And what they've shown is that, and I'll use CPA broadly here. I know everybody that's watching this is not a CPA, right? Accountants, it's much broader field than that. However, if we just look at CPAs have moved from the top spot as being the trusted advisor to now they're in the third spot, right? Who's taken the number one spot? It's the financial advisors, right? So you're seeing not only in the approach, but now you're starting to see it in the data of where financial advisors are now taking more and more of the pie of the potential business. What does this look like instead? The first thing is succession planning, right? Or actually, let me step it back. The first question is, have you had a valuation done on your business in the last 3 years? Best practice is to have one continuously done. And that really protects you well, because most owners aren't thinking about selling today, right? They're thinking about selling it in the future. But in the exit planning industry, we refer to what's known as the 5 Ds, right? So death, disability, disagreement, discouragement, right? These are the elements that often force a sale. So I say that you should honestly have your business valued every year. That is almost a report card in your back pocket, so that if that time unfortunately comes, now you're in a much better position, and you're not having a buyer coming to you and telling you what your business is worth.
And when we are talking about accountants or CPAs, the business owner is always continuously in talks with, at least quarterly, monthly or quarterly, in talks with their accountants, and the accountants know at least the what the books show, right? They might not understand what the valuations could be or what the market is currently, but the business accountants understand, and I think from that perspective, accountants would be a good fit for providing these additional services. And you talked about financial planners, now the most trusted advisors for small business owners, and CPAs have slipped down to third. And what can be done by CPAs to now get back to the first trusted advisor seat, right? So I think by giving more value to these business owners, and what can the other additional values might be. So these type of things where you prepare, be ready, and like you said, the 5Ds, where selling might not always be, you might not have planned, and the selling needed to be done because there are these 5Ds, there are deaths, and all this stuff that come without knowing, and you'll have to sell. And when an accountants who are in continuous talks, they can be able to give advice and properly value their business. I think the business owners would be in a better position themselves.
Correct. And I'll just add on top of that, if you are looking to be the most trusted advisor for that client, it's really two things. Think holistically, right? Outside your own box, and be proactive. Bring those questions, lead the client into some of these situations, right? And one of the best ways I like to do that is, what is your business worth? And we can get into this a little further as we talk a little bit more here today, but often what you hear is what we call country club valuations, meaning I have a friend who runs a company, they got X amounts, right? I know personally that I run my business better, so I expect that I'm going to get X. But when you combine that with the fact that 90% of their wealth is tied up in their business, and for most parts, it's an illiquid asset, that may not come to fruition in terms of their wealth.
Right. So exit planning, it is a broad topic where there are many things under the umbrella of exit planning. So what actually is exit planning, and what are the processes that a business owner might need to think about when they are actually planning for their eventual exit?
Yeah, and for full transparency, I utilize the Exit Planning Institute's framework here. So we break exit planning down into 3 gates, right? So there's 3 gates. The first is going to be discovery. And that's typically, I'm an owner, I've either encountered one of the 5Ds, right? Or I'm being proactive and I'm getting ahead of it. In that phase, we really just talk about, what is the business worth? What do you want to do in the future? How much wealth do you need to live the lifestyle that you want to in the future? Coming out of that, and we use deliverables. So a deliverable is the token that you have to pay to get into the next gate. So the deliverable in the discovery gate is valuation report. It's a personal financial roadmap, and then it's also a business roadmap. In that business roadmap is what we call 90-day sprints. So as we go into the prepare gate, which is the next one, now we're starting to implement those plans. So I'm working with you as the owner, right? We're talking about your leadership team. We're implementing low-hanging fruit in your organization, right? Low effort, low impact. But what we're really focusing in on is identifying the value and protecting that value.
Right.
Then we move into the build phase, right? Where we're now starting to make a lot of those process improvements. Maybe we're extending into a new service line that we hadn't thought about. Maybe we're removing some of the customers, right, that are maybe not the most efficient or high dollar customers, right? We're making our business look better. And now we move into the last 2 stages, which is manage and extract. And those are really found in the last gate, right? And that last gate is going to be decide, right? Am I going to decide to sell? Or am I going to decide to continue to grow? Right. And we revisit that every 90 days with the customer. So it's a continuous process of improvement.
Right. So when we're talking about selling a business, what we in a certain period of time, let's say we are talking about selling a business right now, what we talk about is what the value of the asset is, what is the revenue, what is the EBITDA, what is the multiplier, and what value I could get. But what I hear you say is that how to make your business better, that it could get better value, right? So your business might be a mess currently. It could be in a lot of different service sectors, or there might not be high value services that you are providing. So what you are looking into is, you are not currently trying to sell your business, but if I want to eventually sell my business, how can I improve the valuation of my business? How can I manage the operations? How can I make it lean? What are the customer segments or service segments that I need to get rid of? What additions I might want to make so that the valuations or the revenue that the business will generate, and ultimately the revenue decides the valuation, so that can be made better. So it is not just selling today, but looking into the future and what a seller might want from the business. So looking from the perspective not just from buyer but also from seller, and what the business would look like if we thought about it going forward for, say, next 10-20 years.
Yeah. And I'll add this on top of that. Exit planning is just good business strategy, right? And this is a part of, and I'll come out and say it. I hate the word exit planning because it infers, right, that there's a destination, and that we don't need to plan until we're closer to the destination. So I actually prefer the term value acceleration, or value enhancement, and that really ties into this idea of as well. And I've got a great slide on this. That maybe we can show like in the podcast, but it's strategic value equals simple math, right? So you and I were just talking about the process improvements that we can make within a firm. What happens if I were to tell you that actually 80% of the multiple that you get for your business is not in the financials? It's in what we call the 4 capitals. So you've got your human capital, you've got your social capital, right, which is like your brand, you've got your customer capital, and then you have your infrastructural capital, right? When you have, and I'll give you a good example on customer capital, right? Under diversification of customers is often a red flag, meaning I have, let's just for the sake of simple math, I have 5 customers, 3 of them represent 70% of my book of business, right? If I'm coming in to buy your business, that's a red flag. So we need to diversify those clients. How about another one, Sushil? From the human capital, you're the owner of this business. Can you take off? When's the last time you've taken a vacation? That's a very revealing question when I talk with owners. When's the last time you took a vacation? Did you take a vacation last year during tax season? If you own, right, a value generating business, the owner should be able to walk away at any point. And I won't get too much into this, but there is a difference between what we call a value creation business and what we call a lifestyle business. And the difference is that a lifestyle business is often being used to run a lot of personal expenses through the business, right? You are often the number one salesperson. You manage all the relationships. You're the face of the business. If you were to disappear, the business goes away. So we need to think about building transferable value into businesses and not just focusing on the financials, right?
So when you are talking about a business that is being run around the owner, it is actually not a business but a replacement of salary, right? So someone is working as an employee, and when the employment finishes, the payments, the revenue vanishes. Many owners run their businesses like that. So when an owner is sick or not present, the business dies. And from the buyer's perspective, that is not good. So we want to make it better. Even if your business might be such that it is owner run, owner operated, everything is the owner, you will have to strategically divert your business and bring in people and processes where if you are not present, the business runs itself.
I'll give you another one that maybe some folks listening to this can identify. You started your business 20 years ago. The team around you, are you using the same attorney you did 20 years ago? Does that attorney reflect the growth in your business, right? Maybe you have your brother-in-law doing the taxes for the business, right? These are the types of conversations that are hard and difficult to have as an advisor, but they're necessary. Because often, when you're going into a sale, they are looking at who are the leadership folks in those seats.
So when someone is advising a business, we are talking majorly about small businesses because large businesses tend to have exit planning from day one. For small businesses, they are only focused on running the business while they are alive and not really focused on what happens when they want to retire or sell the business or something bad happens, right? So when someone is going in and giving advice on exit planning, what are the process that is followed in that advice? When you give advice, what are the process that is being followed?
Yeah, it's there is a framework and assessments that are done, but it is very dependent on the owner. So I'll give you an example. When I engage with a customer, the first thing that I'm going to do with them is I'm going to run them through what's known as a triggering event.
Right.
And a little stat here, 70% of business owners who participate in this process, they take action.
Yeah.
Because it's so powerful, right? It is an assessment that is based on 1 to 5, and it's about 150 questions. They cover everything from the attractiveness of the business, the personal financial situation, and even down to you as an owner, what are you going to do day after you sell?
Yeah.
It is based on 1 to 5, and you'll notice there's no average, right?
Yeah.
So it forces the owner to provide validation and reasoning if they're going to be a 3 or they're going to be a 4, right? You have to split it down the middle. There's no 3 there, right? Yeah. So if you're going to be a 3 or below, right, you're going to be below the average, let's call it. And businesses that are below average do not get offers. They do not sell. They're typically liquidation type situations. So if out of this 100-point score, right, and I won't go into all the math there, but let's say you score a 61 or above, right? You are on the furthest edge of the low end of the range of multiple. And it's a good conversation starter because then we go into, all right, let's look at these businesses that have sold in the private market. And granted, it is very hard. I want to let your listeners know, it is very difficult to find good comparables in the private market, right? These are deals that are not often published. You have to infer a lot of information. But one thing we can boil down to is the range of value. So how much value are these businesses generating within the range of multiple? And then finally, the last thing I give them the wealth gap analysis. Right. And this is often something that really lands with them. And the basis of the wealth gap analysis is you start off by asking, how much are you worth today? Minus the business. You can put the house in, you can put your stocks, savings, cash on hand. Let's figure out what that number is. What is the annual salary you would like to live on after you sell the business? That then helps us back into what we call the 4% rule, right? I need to have $5 million saved if I want to live on an annual salary of $200,000 annually, right? Yeah. Often what they find out, though, is that they have a massive wealth gap because their business isn't worth what they thought it was. Yeah. So it spurs action, right? That is the starting point for us.
Right. And so, Chris, you are a certified exit planning advisor, right? So this is what you do. You are skilled. You are an expert in providing these services. But we are talking about how an accountant can add this service, exit planning service, advisory service, to their portfolio and give it to their current clients. So why should or how should an accountant think about when they are trying to add these services, because they are not expert in that field? Why should they look into providing or adding those services to their clients first? And second would be, how can they do that? So 2 questions.
Yeah, and that's a great question because, if you don't have the expertise, going into a new service area, you would look to offload it to somebody, and that's not going to be a great experience. Yeah. So what I would say is, the best way to do this is, I've worked with accountants, I've worked with small businesses. The way we work here at Inevitable Sale is, you would look into your book of business, you'd identify owners that are maybe 50 and above, $1 million annual revenue from their business and above, and you would have a conversation with them. And really that conversation might be around, what do you think the business is worth? What are your end goals for life? How do you want to live? And if there's interest there, that's where you would bring somebody like myself in. Right. So I would work under your masthead. I'm just another employee in their eyes. Right? I have a branded email, and I would run that process for you, through
Right.
you,
Right.
meaning I'm going to leave you out of the process, but I'm going to run it as a quarterback,
Right.
and I'm going to keep you in the loop. And as opportunities arise within that exit planning, right,
Yeah.
where they may need some additional tax advice or they may need some specialized advice, we can pull you back into the fold,
Right.
right? So the idea is really to manage this holistically in a way where you've got a bunch of value add services that
Mhm.
Inevitable Sale is bringing to you. And then on the back end, you're paying a fixed fee. The fee
Right.
never changes. It allows you to margin up, margin down if you want to. And you don't have to bring on a skill set, right, that you may not have, especially if it's only going to be for a couple of clients you might have in your book.
Right. Right. So the business is coming from the existing client. You look into your clients list and you identify clients that are 50 or above with $1 million in annual revenue, and that might need an exit planning. There, they do not have set up an exit planning. You go and talk to them. What are your plans? Have you actually thought about planning for an exit, eventually selling it? And you discuss, and then you look if there is opportunity there for to give those advisory service. And if there is an opportunity, then you do give advice. But because you have no expertise, you bring in people such as you, Chris. Now let's also talk about benefits, right? Incentives in terms of what then the accounting firms can get, and also in terms of what the clients will get. So what are those benefits that an accounting firms will be able to derive by providing those additional exit planning services?
Yeah, I'll zoom out here for a second, right? And I'm gonna zoom out on the accountant's business as a whole.
Right.
If you're adding an additional service line
Mhm.
that costs you no overhead,
Yeah.
the way that's going to look on the bottom line number on revenue per full-time employee, right?
Right.
That's going to look much better. And in fact, because I often work with buyers, right, or I work with SBA lenders, I'm acutely aware that they are looking at that number, right? And firms that are getting purchased at a premium multiple right now
Right.
are having numbers between $400 to $600
Right.
on that revenue per full time employee.
Mhm.
So this is a bit of a hack for you to
Right.
bring in a service line
Right.
uh, where you can just pile revenue back into the organization.
Right. And
And I will
sure.
just add one thing. Um, Anybody listening to this as a follow up,
Yeah.
I can share this with you. I have a intake form, right,
Right.
that accountants can use with their clients to make that conversation a little bit easier and guide them.
Right. Right. Yes. So a new service line, but without overhead. So you can only see, let's say, revenue. And also, uh, last time in the podcast, I was talking with a marketing expert who provided marketing services to accounting firms, right? And we were talking about existing clients and why those existing clients are your number one business drivers, and how you could add more value to them. And it is easier because you have already that established relationship where you can have that conversation without hesitation. Your existing clients who already you are providing services and you are trying to help, and that would be no additional cost but additional revenue for you. And also, you talked about this exit planning being a regular phenomenon, right? So you talked about going in and assessing the business at least 3 months at a time, right? So you could get recurring revenue with no extra cost. To talk to,
Exactly. And I have a
sure.
pricing sheet that lays out.
Mhm.
Go ahead.
Yeah, no. So you also talked that the service is not provided by you. Your firm is not actually providing the service. The service is being provided the accounting firm. You are a sort of employee, right? We could say a contractor,
Yeah.
of sorts, and you'll be providing services. You'll be operating the back end, if you can say that, right? So in the front, it is your client. You are providing the services, but Chris will be helping you with the advisory work.
Correct. Correct. I'll provide all the reports. I'll lead the meetings. Often the accountant isn't required to be as part of those meetings. I pull them in, when maybe we're talking about tax planning or gifting or something that might flow back into their world. But often, they're just getting a report from
Mhm.
me on a weekly basis. This is what discussed. Here are the milestones. here's what we're
Right.
going to do next.
Right. Can I say that the exit planning process would be a core exit planning where there's additional revenue already, and also when there is a requirement of additional tax advisory or other advisory, is there an aspect of additional work from there as well, or revenue from there as well?
Yes, often, in exit planning engagement, depending on the business, may run anywhere from $50,000 to $90,000 annually.
Right.
And, some of that cost is, of course, going to be in outside advisors that we may need.
Mm-hmm.
However, if you as a firm today may already have somebody on staff who's a wealth planner, right?
Right.
Or may already have somebody who is, understands estate planning,
Mm-hmm.
right? These are the type of individuals that you can almost double activate, because
Yeah.
now you've got another service line where you can put them to work.
Right. Right. Accountants, or you already have your existing clients, you look into your clients list, you look to see who might need the exit planning advisory, and you identify them, you have a talk with them, and if they do not have a strategy, then you bring them in and consult them with the advisory services, and you bring in people like Chris to help with the setting the strategy, and it is a continuous process.
Correct.
Now the question arises, right? So because accountants, they are not experts in this field, you'll need services of people like Chris. Now, if they require your services, first, how can they reach you? And is there an
Yeah,
obligation when they reach you, or have that conversation on what they want to do in their accounting firms, how the modality of the work is going to look like? What is the process?
Yeah, absolutely. And I know we'll have a link for everybody here coming out of the show, but book time with me. Anytime over the next few weeks that works well for you. It typically takes about 30 minutes.
Yeah.
I'll run an intake session with you,
Right.
primarily equipping you with the information you need, whether it's how do I get started, what is this all about,
Yeah.
what's the pricing, right? All of those things we'll cover, and then second of all, I would say connect with me on LinkedIn as well. I'm always
Yeah.
sharing content on there
Yeah.
that's hyper specific to accounting firms or SMBs.
Right, right. Nice. And the calls that you take, it is no obligation call, just a discovery call to understand where the values align or not, and how you could add those services. And if you decide to work on with Chris, then you can go ahead. But the discovery call would be just to get to know each other and understand the business and the way forward that you want to go with your business, and also how you will work with Chris, and what that whole aspect of exit planning looks like.
Yep. No obligation. Just book time with me. If it doesn't work, that's fine. Maybe we'll talk in 6 months.
Right. And also, before we go, I'd also like to say that we are talking about the questionnaire that you want to go ahead with your clients and discuss, right? We'll also put the link in the description, and you can get that for free. You can use it, even if you do not book a call here, but you could use it and go and try and understand your clients and whether they need their services or not. If you want to work with Chris, then there's always the link to go and book the call with him.
Absolutely. I appreciate the opportunity to come on here and talk about this. It's an area that I think in the accounting space doesn't get a lot of coverage.
Mhm.
So I appreciate the opportunity to come on here and talk about it.
Right. And accountants, they are quite bogged down with the legacy work that they do, right? Bookkeeping and taxes and those type of things now tend to be quite work heavy, right? Hours you put in too much hours, but the returns tend to be quite low, and accounting firms now do look for other value addition services that they could provide with little cost, little effort, but with high margins, right? So people are looking at those services to offer to their clients, and I think exit planning would be one very good opportunity for them. And so, Chris, before we go, is there anything that you wanted to add that I might have forgotten or not included? Is there anything that you wanted to add before we go?
No, I think I bored folks enough.
Right.
Reach out to me if you're interested in talking. But thank you for the opportunity.
Thank you. Thank you very much, Chris. And it was very good session for the accountants that they could use your services, use exit planning as a additional offering for their firms, and bring in extra revenue without having that extra cost with them. So thank you very much, Chris, and I hope to see you again.
Yes, sir. Take it easy.
Okay, bye bye.